right. Hello, everybody. I am Dan O'Connor with Strandhill Christie's International Real Estate, and I'm here with my good friend, Doug Smith, Stratis Financial Mortgage Broker Extraordinaire. How you doing, Doug?
I'm doing pretty well today, Dan. Doing pretty well, particularly for a Friday afternoon, which can be a tired time of week.
For sure. And obviously, with all that's going on, today is April 3rd. It's Friday. It's around 3 o'clock Pacific Standard Time. And we've now been dealing with, obviously, the coronavirus for a couple weeks now, the safer at home, a lot of volatility in the financial markets, all this kind of stuff. And that's what I wanted to talk to you about today and kind of see what you are dealing with as a mortgage broker, mortgage banker, and kind of shed some light on your firsthand experience in this area.
Absolutely. I'm happy to share what insight I'm able to gain as we go along. Of course, underlying everything is a huge concern to be part of the solution in helping keep my family healthy and helping be part of keeping everyone else around us and in the world healthy by being responsible in how we behave, but not giving in to complete panic. We're blessed with a certain amount of wisdom and follow that in how we operate. And while taking care of that to the best of my ability, having a real front row seat to watching the financial markets, watching the response of how that drives into the mortgage market, and then how different lenders and investors are kind of responding to that. You had done a piece a little while ago where you talked about how this isn't 2008. 2008, and bear in mind, as I talk about all of this in somewhat clinical terms, anybody who knows me knows that my heart of concern is huge. But right now we're here to kind of give people some information about the financial markets.
Exactly.
Right. And 2008 was a collapse of a flawed financial system. And as much fun as it was for you and I to come up with analogies describing everybody's behaviors during those times, this is fundamentally different. It's an interruption of an otherwise healthy economy, which then begs the question of how deep is that interruption and how long is it going to last? None of us really know.
Yeah, that's for sure.
What we do know is what we're seeing up till this time. Federal Reserve got involved really early on when the stock market was tanking. Usually what will happen is as stocks tank, the next investment that a lot of times investors will move into in the financial world is mortgages, corporate debt, and then they move to treasuries and cash. There was so much uncertainty that basically the money left the stock market and everybody went to the sideline and was parking their money in cash. And what that meant to the mortgage industry was there's no money flowing in saying we want to buy mortgages. And when that happens, it's very difficult for new mortgages to get made. And the Federal Reserve stepped in decisively and quickly to commit to providing funds to buy mortgage-backed securities to help keep the wheels turning in that market, which was a great thing. People will tell you there's other unintended consequences. That's all kind of above my pay grade. We're not really going to know.
Just to boil it down for the people that don't really understand.
Sorry.
No, it's okay. I mean, you're doing the best you can, Doug. But basically, the gist is like banks or mortgage brokers make loans to individuals and families, obviously, and then they sell those off, package them up, sell them off to either larger financial institutions, investors, or the government in this case that we're talking about. And by selling them, those lenders are receiving cash back to go out and lend again. So if they can't sell off a bundle of loans, they don't get replenished with, free flowing cash that they could go out and lend again. And that freezes up the mortgage market.
That's a great distillation of it. And thank you for pulling me back in from.
It's complicated. It's funny is I took, real estate classes in college, and we had a former Fed chairman as one of our teachers. And, we got tested on all this stuff. I'll never forget it. But it was all the stuff we were learning about was very, very early 2000s. And so it led right into 2008, 2009. And again, we are just not as over leveraged on the single family, American homeowner front as we were back then. And it wasn't as risky of loans. And that's why you referenced like a blog post I wrote about, which was just saying like, we're not in, as over leveraged, and that's not going to be the reason all heck breaks loose.
That's really well said.
So just to dive in here, like, how is your mortgage business? Like, how are you getting people, buying homes and getting mortgages? Are you getting flooded with refinances? What are you seeing right now as pertains to your business?
We are still seeing people interested in purchasing homes. There's a pretty active market across a wide range of price points within 5 miles of where either one of us sits.
Right.
So there's always going to be markets that are going to stay more active than others. My business tends to work more on the, I don't want to say entry level, but entry level up to 1 million, and the mid 1 millions is more where we see a lot of activity. And those properties are still moving quickly for the most part if they're well priced, and there's some value to be had there. What we are seeing, and there's still plenty of refinance activity with respect to different lenders' responses to the financial markets and the uncertainty. What we're seeing a lot of is everyone kind of adjusted upward. Historically, you can kind of say, based on these other financial measures, here's where rates should be. Everybody added a risk premium to that, where in other words, rates got higher for a given level of, a given state of the financial market than they typically would be because of risk and perceived risk. And what we're seeing a lot of is based on little, what I call head fakes within the market, one or two players will come in and get more realistic on their pricing. And it's lasting just a couple hours at a time in a lot of cases. So one of the things.
Sorry, so I think we lost you there for a second, but you were talking about little head fakes in the market, and some lenders that would want some business, they would do kind of a small, dip in rates to get business, but it wouldn't last very long.
Right. And that's where just being, the term that I use a lot is relaxed vigilance, where you get yourself in a place to be ready. And that also helps you, just like we talked about earlier, come from a position of clarity rather than panic. Right. And okay, I've got an objective. Let's see what we can do. The area that's really been dynamic is the response of the lending world to the interruption in our economy to develop standards to make loans in the near term. It's a 30-year investment, but historically, the biggest time of default for most mortgages is first payment, believe it or not. And so
I didn't know that, actually.
Yeah, right now they're making guideline adjustments to make sure that there's some level of assurance that people's financial world is not completely interrupted. And one of the biggest ones we've seen is for self-employed people. Just this week, guidance came out where, they're requiring us to demonstrate that the business is still open via a website or a certification that a phone call was made. But a number of investors are starting to ask for bank statements, current bank statements, to show that the cash flow hasn't been interrupted. And so, an important question, if you talk to anyone, of course, is, what are the guidelines that we're going to be subjected to for making sure that we're able to bring this home and secure the mortgage ultimately. And
so the question is, or I guess to recap or clarify, the general attitude from the lending sources is that they are willing to lend, and yes. and not anything has changed about their willingness to lend on a dramatic level. Although obviously there's guideline changes, but there aren't a number of people just closing their doors to lending at this point.
We haven't seen that many. What we are seeing is a number, like there'll be lenders pulling out of certain market spaces. Jumbo loans, what we've seen in the jumbo market at large anyway is the big banks that are making those loans out of their own money have been able to really command a presence in that market that's difficult for other people to compete with. Um, but lately we had been starting to see that you could get jumbo loans kind of in the open market where you're buying them from people, da 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 da. And by the big banks, I'm referring to, B of A, Wells, Chase had been very dominant in that space.
For
And we've been
sure.
seeing mortgage banks who operate the way you were describing, where they get people to go buy them, starting to be able to compete in that space. And a lot of them have pulled out of that jumbo market and are just kind of conceding that space to the big box banks that are lending their own money. And so each one of them is going to make their own decisions in that market.
Right. Are you seeing anybody pull out of deals that are like in escrow? Have you seen much of that at all, or?
I haven't personally firsthand seen it. I've heard, and this is unverified, that
Sure.
they were doing loans where they were basing income off 12 months bank statements and or 24 months bank statements, and we were approved with a number of sources that were doing those, and they've all notified us that they're suspending those loan programs. I've heard that there were transactions getting ready to close that were where the funder said, we're not going to fund this loan. That is secondhand and unverified.
Have you heard anything about issues with appraisals or any kind of like market condition markdowns, anything like that?
No, what's been helpful is Fannie Mae came out with guidance on basically giving an individual appraiser a lot of latitude. If they couldn't get access and or they weren't comfortable with it and they would certify that, they could do either a drive-by or what they call a desktop, where with so much information available on the internet, they can use photos off the MLS and they can pull comparable sales. And if they could, provide evaluation that way. And what you'll find happening is, when Fannie Mae comes out with that kind of guidelines, that's what everyone, even when they're lending their own money, they kind of use that as sort of their benchmark. And they say, okay, is there anything we need to do? So that's been really good, because when it first started to happen a couple of weeks ago, it was like, oh boy, people don't want to let appraisers in. What are we going to do? Is there an alternative way to get a reasonable valuation? There is, and they've been applying it. And so that's been very encouraging.
So what would you say is like the biggest change you've seen in your business in the last 3 weeks?
I would honestly say the extent to which they're making it a requirement to continue to verify that income hasn't been interrupted. That 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 keeps getting ratcheted down tighter and tighter, which, while it's a hassle, that's minor. Fundamentally, you can understand that concern,
Oh, for sure.
because that's evolving day by day.
Yeah.
And the advice I would give anyone who's thinking about buying right now is, the underlying message is the same. If you feel good about your ability to get in, buy it, hang on, and make those payments and feel okay with the payments that you're making for where you live, if you can hang out long enough, it's going to prove to be a good move. Is there a reasonable likelihood that in the next 2, 3, 4, 8, 12, 24 months, you would wish it was worth more than it is? That's possible, for sure. Absolutely. We just don't know. And that really, when people ask me that question, my kind of flippant first answer is that answer is above my pay grade, right? It's
Yeah.
very much of a personal risk tolerance
Right.
and what sort of certainty any individual has with their ability to get in and hang out.
And I get that question a lot, as in my, with my kind of twist on it, as far as people asking me, is it a good time to buy? And, you know, I would definitely say it all depends on, you know, what you need to buy for or want to buy for, right? And and I always encourage it to be for the long term. But are you buying a location that you've wanted for a long time, and all of a sudden it happened to come available during this climate? You know, it could be a location that's really hard to find in or outside this climate, and so you might want to just grab it if you have that ability. And so it all depends on what your actual motivation or desire or circumstances are. So I think, but for the long term, I definitely think it's not something that should dissuade you if you're looking long term. What are you telling clients that are looking to purchase right now, and honestly refi, if you're still getting the refi calls, uh, timing from like application to funding.
Well, we've still been performing on purchases to a 30-day escrow. There were occasions where
That's unbelievable.
we were able to we were able to crack down below that, and it's and I would start to say, given the uncertainty that we're facing, it's wise to leave some latitude in that. And I think
For
buyers
sure.
probably have the opportunity to require that of a seller because, there are everything that we do is taking a little bit longer at each step of the way. So, I would say 40 days is probably a little more realistic now, but we've got a couple that we just closed that were 30 or just inside, and some that were just opened where we're going to be, what I would say 30-ish. And refinances, we're just kind of, the good news is because it's gotten as busy as it's been for a while now, most funding sources will allow you to lock for 60 days for no additional fee. Usually, the longer you lock an interest rate, they're going to charge you a little bit more in the way of points up front, a percentage of the loan amount. So it might cost you a quarter of a point. So on $1 million loan, that'd be $2,500 to get a 60-day lock compared to a 30. Right now, they're giving away 60s. So we're
That's
saying
interesting.
just take it.
I was gonna ask, has this situation affected rate lock periods in either direction by the banks?
Everybody's kind of stuck with that 60, and I think that what they want to do is, my speculation is purely that speculation, but you give longer than 60 and don't make it more expensive, people will start to get tempted to try to play the market and
Right,
see, I'm going to lock it in and then I may not honor that lock.
right,
And so they're kind of holding it to 60 because right now you can generally meet a 60 without a tremendous amount of heartburn.
right.
But you also don't want to let too much grass grow under your feet. But what we're, without going, and maybe I'm going too far down the rabbit hole, at the very end, they make you, congratulations, you get to come with me.
Yeah.
They make us verify employment again right at the end. And
Right.
a number of companies use big online services. One is called the Work Number. And I just had a refinance this afternoon where we were ready to draw closing documents, but the Work Number hasn't updated for 10 days because they pay every 2 weeks. And those verifications have to be effective within 3 days of the note. So we have to wait until next Wednesday because uh, we weren't able to get someone at the borrower's employer to just get on the phone and say, no, they haven't been fired. That's pretty much all we need.
Yeah.
Yep, they still work here, which again is understandable.
Right.
And as much as you want to say, come on, you
Right.
can understand someone not wanting to be put in writing that they said this person was unaffected
For sure.
because
Yeah.
people are worried about that liability. So it's annoying, but in the grand scheme, we just make sure we adjust to it. If
Right.
there's mortgage payments or property taxes coming due, make sure that that doesn't get forgotten.
I think
And
that's an overwhelming message to get across to anybody in a transaction right now is a little bit of patience goes a really long way. And if you're all working towards the common goal of closing, you know,
yeah,
barring, renegotiations and stuff like that, like, you know, it's just we're just in a time where things change so rapidly that you gotta go with the flow a little bit, you
yeah,
know.
that's a very good point. And kind of understanding there's a ton of things that are frustrating and annoying,
Right,
but forward motion,
right.
right? And saying burning energy on it doesn't make sense or it's frustrating really isn't constructive. And we have things to accomplish that are really important for people.
So let me kind of recap everything you said, and just to tell me if I'm right on or off. But in general, obviously we're still lending, making purchase loans, still doing refinances in general. Generally speaking, uh, again, also generally speaking, rates are still, historically on a historic scope, very attractive. And if anything, it sounds like lenders are basically doing things to work within the parameters of the situation we're in. And then, then we need the clients to kind of also do that. And the emphasis really is on, are you still employed, and are you still basically making the same kind of money that you were making when this all started? And that'll make the lenders feel comfortable.
Well, and I think that's, to back it up even a little bit further, the underlying tone is people want to be continuing to fund loans because it's valuable to society, it's valuable to people, it's valuable to our economy.
And
So,
it's a major source of income for these lending institutions too,
yeah,
right? I mean,
yeah.
the
And I just think,
transactional side of it.
yeah, people, in the people that I am dealing with, kind of all the way around, everybody's kind of bought into, let's make this work. And it's ultimately our immediate obligation is to our client. But, I have a friend from boyhood who worked at the Federal Reserve. And when I told him that we were still chugging, he said, I'm really glad to hear that because that's vital to our economy, because housing is kind of the new manufacturing, because we don't have as much manufacturing here anymore. So housing is what creates those I don't even like to say ancillary job because every job is important, but
For sure.
it's the thing that creates more jobs on top of itself.
It's the one of the bigger blue collar industries we still have is,
Yep.
home building, home repair, and selling houses is a huge boost to the economy, because a lot of stuff usually comes with that boosts the
Right.
economy.
Right. And I want to loop back to what you had said about, a certain market or a certain type of property. And I think don't sell yourself short on the value that you're going to bring to that with your knowledge of the local market. And and one of the common things that I've always enjoyed uh, about our friendship is our ability to get all nerd geeked up about, oh my God, that property is a gem.
Right.
It's a down zone duplex in West Hermosa. It's a unicorn. Oh my
Right.
God, that's so exciting. And I go back to my mom's saying of the meek may inherit the earth, but they will never own coastal real estate in Southern California. And I think that's where you're going to be able to continue to be of value to people is, and the fact that you're not flashy or and don't have commission breath, where if someone's been looking for something specific, if you call them up and go, hey, this is a real opportunity, it behooves them to listen. So that's the one nice thing I'm going to say about you today, Dan.
I appreciate it. I'll take it. Let's stop there, guys. I mean, I really didn't want to make this video too long, and I really appreciate everything. I appreciate you coming on here, and I just kind of wanted to wrap up with just like making sure you're doing okay personally, and how's the family doing?
Everybody's holding up pretty well. My 15-year-old son has gotten better at Grand Theft Auto than he ever could have imagined, which is a slight difference in how he spends his day compared to Miracosta Swim and Club Water Polo, where there was a lot of physical outlet. So, now he's letting that out by racing cars and shooting people on a video game. And as I enjoy your armory in the background, so I know Declan's doing similar given his stage in the game.
Declan and I are quite the dynamic duo on Fortnite on PlayStation.
Oh, that's phenomenal. And I think that speaks to something, there's, and so many people are talking about it right now that it can become kind of trite, but it really does drive home to me how fortunate I am to have my wife and my son, where oddly enough, we really enjoy spending time together. And everybody kind of understands that it's hard for each other. And the over under on my son being more mature than me was around 12, and he kind of hit that. And so he's been, our family conversations at the dinner table have been just great and helped you keep perspective on, what's important and our role within our family and our role to our society about being smart and being responsible, like we talked about. And just again, our hard is a lot better than a lot of people's, and touch
Yeah,
wood.
totally.
And just super thankful for everything I do have, and most importantly, the people in my family, my friends that I consider family, such as yourself, and the people that I work with that are also family, that have no ego about it. And it's, we're in a certain space and time, so let's make sure we do that part right.
Yeah, and I think honestly, I'm in the same boat with you. I'm trying to come from a place, and I'm, where I'm just grateful for what I do have, and grateful for the health, and want to help anybody that needs help, and in any kind of way. And I know you have that attitude just in life in general, and that's why you and I are such good friends. And hopefully from a business perspective, just in general, saying like a video like this can help educate people. And that's all I care about, is that if stuff like this, stuff like any kind of blog post or videos I do, and any information you share with your clients, like, we're just here to help and provide information. And whatever comes of that comes of that. But I really appreciate you coming on here again, Doug. And I actually really hope we could do this again
Oh,
soon.
yeah, me too, Dan. Oh, and relief packages. Last
Oh,
thing,
yeah, go for it.
the government did mandate that, the Fannie Mae and Freddie Mac and FHA and VA loans are supposed to give a 90-day. Oh, and now, of course, my 56-year-old brain, 57, is dropping the term where you can postpone your mortgage payments for 90 days. And as the guidance has been issued right now, they're saying you're going to have to repay it after the 90 days. Really, I would honestly say they're just kicking the can down the road, which is an appropriate action. And the idea there being, we're going to give you 90 days of relief, and it's not reasonable to expect that if everything recovers in 80 days, God willing, that they're going to call that full 3 months due at that point. They're
Oh,
going to
right.
continue to work that sort of stuff out. And, most lenders that are collecting mortgage payments right now have resources on their websites. So look at that. And some of them are still just saying, call us. So if you've got an extra phone laying around that you can have be on hold for a while, there are programs starting to take shape.
Yeah,
And like so many things, it's still forming, but there are things starting to take shape. So, you can look into it, and people can always, I'm happy to answer any questions I can to the best of my knowledge.
I really appreciate you bringing that up, because we did forget to talk about that. And I'm gonna put your contact info on here,
But
so that anybody that sees this can reach out if they have any other questions.
awesome.
Awesome. All right, Doug. I really
Right,
appreciate
Dan.
it. Thanks so much for your time.
Great talking to you.
All right. See you later.
Be well.